This is episode 35 of Zen and the Art of Real Estate Investing with my two guests for the first time, Daniel Foch and Nick Hill. They are the co-hosts of the #1 real estate investing show in Canada, the Canadian Real Estate Investor Podcast. Guys, welcome to the show. Nice to have you here.
Yeah, thanks for having us. It's an honor to be your first, pair of guests as well.
Yeah, I'm liking it. And I mean, your real estate investing podcast host. So I don't know if this thing's ever going to end. We may just be on here for 5-6 hours. We'll see what we can do.
Couple real estate guys who love the sound of their own voice. I imagine we could ramble on forever if we had the chance.
Yeah, we'll go full Joe Rogan style on this one and just go for 3-4 hours. No problem.
Yeah, absolutely. So why don't we just get into individually? Let's just get into where your investment journey started, and then we'll see how it got you to the podcast and the other ancillary parts of real estate that you guys have been involved in.
Sure.
Daniel, let's hit you first.
Okay,
how did you get started in your investing voyage?
Yeah, so I started real estate investing in university. Actually, I got kicked out of student residence. So, and then I ended up being in a rental property within my second semester. And my parents had been in real estate investing for a while. So my dad was like, "Look, maybe we can figure something out where you can rent to other students, and you sort of take that landlord relationship and any equity that we make in the property." So I really got a leg up, not going to lie. And that kind of gave me my start, but it also, it was a really valuable learning experience because I was managing a student rental and a lot of the tenants were my friends. And so, I had to take people to court for damaging a property so it really gave me an understanding of the business of real estate and the customer service aspect, but also the grittiness of that customer service relationship in landlording. And then from there, did a house hack on a primary residence and basically just started scaling a portfolio from there. And, timing was a big thing in the Canadian real estate market. If you got in at the right time, kind of 2015, 2016, there was a big equity wave that a lot of people have it's just coming to an end. A lot of people really rolled that into subsequent investments. And I did the same thing. So I bought a fourplex with an investor client of mine and started really going in and joint venturing on deals that clients were doing. I don't own anything on my own anymore. I think it's too cumbersome. I think being a landlord is too tough of a job for somebody to do as an individual. So now I kind of am a GP and run funds and sort of do that kind of thing. Yeah.
Awesome. Nick, what about you? And then I'm going to match to that because I have some commonalities with that one that Daniel talked about.
Great. Yeah. Unfortunately, I didn't have a leg up. My parents were not in real estate. Dad's a teacher. Mom's a social worker. So, but I had the entrepreneur bug since my early 20s. I started several small businesses, all with the intention of, okay, I'm going to cash out this business and go buy some real estate, which didn't happen until the fifth business. Unfortunately, I got a bit of a later start. I'm 33 right now, but I started investing in kind of my late 20s. Simple, same thing, just started with a duplex. Had been, in the analysis paralysis research phase for years, going to conferences and connecting with investors, doing as much due diligence as I could. And then, really made the dive head first on that first property. Went and kind of did everything myself, found the property, did the driving for dollars, analyzed a couple hundred deals in that market, built a power team in that local area, and was able to tenant it and do all the repairs and renovations myself, which was a really great experience. I actually kind of miss it because unfortunately, Dan and I don't really get to do that stuff as much as we used to. So that was several years ago. And then from that first duplex, another duplex and another duplex. And then Dan and I got together on a potential project that we were trying to do together. I actually slid into his DMs, and the rest is history. Yeah, built out an awesome package for that first project we tried to work on. Ended up never getting the deal done, but it's led us to start a podcast, and now we own dozens, I think, with 30 plus properties right now, with several more under contract. Units. Yeah. So that's kind of it. Just a normal guy that just tried to go full real estate. And throughout that process, I realized that, you know, the financial aspect wasn't my strong suit. So I became a mortgage agent, which is the same as a loan officer down in the States, just to figure out that financing piece. I had a background in construction. So I really just wanted to become a very well-rounded real estate investor and just real estate person and professional in general.
Yeah, I mean, it's interesting though, because you know, Daniel said in the beginning, like he had a leg up. I definitely had a leg up. I grew up with a dad who was an investor, and I was in abandoned homes from like 5 years old on. But going to you, Nick, I think the like for listeners of both our podcasts, the most important thing is to like anybody can be a real estate investor. It's really like, what are you going to do with it when you get there? Are you going to be able to get past the analysis paralysis that, you know, many of us have been in? What was the thing for you, Nick, that got you past the analysis paralysis? And then I'll get your take too, Daniel, because that's where so many of like new investors and even investors who get like their first one, they just get stuck and then they don't know what to do.
Mm-hmm.
Yeah, I mean, it's a really great question. I think it just came from determination. I mean, I didn't have a leg up per se, but what I did have is a lot of experience in starting and managing and failing in my own businesses. So I maintained corporate jobs, and I had a corporate job in commercial real estate and commercial real estate development, and played in that space for quite a while, always staying close to real estate. But on the side, I'd have all these side hustles, side projects that would actually turn into semi-scalable and usually profitable businesses. So I think, you know, real estate investing is just a business like anything else. And if you're treating it like a business, as you should, you will be successful. And I just started to look at it as a business, right? You know, for years when I was going through the analysis paralysis, I was doing a whole bunch of due diligence. I knew what I was talking about. I had all that stuff, but I didn't take that one more step to actually doing it. And as soon as you do it, you realize that you knew nothing, and all the due diligence you did goes out the window, and then you start learning the hard way by actually doing it. So I think it was just the determination to get the first deal done, and that's always the hardest, and then the second one's the hardest, and the third one's the hardest, and then it kind of gets easier after that. So yeah, just treating it like a business, taking it seriously, writing a business plan, and then truly surrounding myself with people that were doing it was a major factor for me to actually get going.
Yeah, I think the part that you mentioned
huge.
at the end
Dan,
there,
did you?
Yeah. Oh, sorry. Nick, you were mentioning like surrounding yourself with the right people. I mean, for Jonathan and I, like Jonathan, you mentioned, having a dad who is an investor. I mean, when I look at Nick's trajectory, it's very much one of those who, not how things, like Dan Sullivan's book, right? It's like finding the people to make these things happen. And for me, my first investment, my dad helped me a lot with that. But pretty much pushed me to do it. Pretty much said, we're doing this and like, you're going to benefit from it. So just like get in, we're boarding the rocket ship. Right. And I wouldn't have done it at that point because I would have just overanalyzed it, probably with most things in life. Like if I wasn't forced into a situation, I would have just analyzed it and never done it. And then subsequently, like I found actually a guy who cold called me, who's now my business partner, but and Nick and I work with him a lot. I mean, he's in the mortgage space and would buy a deal basically and figure out how to fundraise for it during the closing period. And I learned that just the skills of putting yourself under that immense pressure. Not that I would recommend it because it's not for everyone. Some people can execute a little bit better, but like he would say, go find me a perfect deal. And I would go find it. And then he would just do it. And I was watching this and I'm like, okay, like if he trusts my ability to find the deal well enough, and I trust his ability to execute the deal well enough, we have a perfect system. Like that's my new who in these situations. Cause my dad and I, there just wasn't a scalable situation that we could have invested together indefinitely, but finding a new who. So for a lot of people, it's really like putting together a team of people that, if you go find a real estate professional in a local market or a wholesaler or a realtor who's sourcing amazing deals, and you can trust everything that they bring to you. Now, all of a sudden you've brought yourself way closer. You don't need to do the analysis because they're not bringing you crappy deals. And then, so a lot of it from my perspective is putting together the team of people who can make you a good investor. And then once you've done that, the rest is just, you're already an investor. You just literally have to close on your first transaction.
Yeah, that's awesome. And I think, you talk about Who Not How, which is such a great book. I love it. And part of that is also knowing like what you suck at as an investor, like
self-awareness.
Nick was saying, I don't love being a landlord because I don't want to talk to the tenants. I like to make sure the building's fine and everything's running perfect. But like, if they call me, I don't want to answer, and that's not good for the tenants. So I have to have someone involved. My sister and I traded off for years with her taking care of the tenant side and me taking care of the other stuff that I needed to, if someone needed to get evicted. But that's an important part. Have you guys found that it's important, like as you go through multiple investments and now, if you're doing syndications, knowing which parts, like you said also before, Nick, like maybe like numbers aren't for someone or the construction aspect's not for one part, but then you build the connections to figure out who can do it, so you can, save your time to work on your best parts.
Yeah, I mean, I think it's vital. I can comfortably say I'd be nowhere close to where I am if I tried to do everything myself. I probably would have screwed up the first or second property and walked away from it like I know, and it's unfortunate, but that a lot of people do, right? People have this mentality that, okay, it's only one house. I don't need a partner. I don't want a partner. I want the whole thing. And I understand that mentality. You want ownership, you want to have control. But again, going back to my experience as a small business owner, at one point in my, I looked at it and I was like, I've had more business partners than girlfriends in my life. And I don't know if that's a good thing or bad thing or represents my dating history or anything. But, you realize that the partnerships within your business, whatever business it is, obviously today we're talking about real estate investing, that those partnerships are going to make or break you. So, and you're so much better off to own a smaller piece of a bigger pie than to own a whole pie that doesn't really do anything for you, or that tastes horrible, or that's undercooked, or whatever analogy you want to use. So, I mean, we have accountants, we have paralegals, we have CFAs, we have CPAs, we have investment bankers, everyone, private lenders, everyone on our team I think guys like Dan, myself, and you, Jonathan, I think we're probably amazing generalists for the most part. And you have to be if you want to be in the position that we're in, which is kind of that overall coordinator, or if you want to make it sexier, that quarterback, right? You're quarterbacking the deal, but you're calling in every other player to get them to do what they do best. And, I don't claim to be the best at anything other than maybe, bringing people together and aligning them on a vision and then being able to, help manage that execution.
Yeah. Dan, what about you? What's your experience with that in terms of like bringing on the people? I know you talked about it a little, but how important has that been in terms of getting to where you are now?
Yeah, I would say I didn't really realize the importance of it until recently, when I realized that I was really just running a lifestyle business. I mean, I wasn't even really running a business. As a professional, I was quite literally just doing a job, and I was making good money. I mean, this working in the real estate profession. But the reality is I cultivated as a result of that a certain set of skills, but I was always hitting a capacity problem because, to be honest with you, I'm not a good customer service person. I'm a results-based professional. And so I was good at sales and marketing, and I was good at delivering results to customers, but I couldn't do customer service. So I figured, okay, I got to outsource that part of my business. And so I did. I had brought on basically a licensed assistant for a long period of time, and it completely scaled my business up. And now we're shifting more into commercial advisory, commercial services, because the residential market's really, really dead up here. And on the volume side, and it's the same thing. It's I know, and Nick and I both have a passion for, but also I think an expertise in that sales and marketing space. And there's a lot of skilled business people, skilled executors who don't want to do sales and marketing. Half of us talking on the podcast is literally us reiterating notes from conversations or calls that we had with the other guys that we're in business with. And we sound like geniuses, but it's just because these guys don't want to have the partner at our brokerage and the lead investor in our fund literally doesn't have Instagram, doesn't want to, has no interest in it. I send him an Instagram link to check up to watch a video, and he has to sign into his wife's Instagram account because some people just don't want to be that person. but he's an incredibly skilled executor and doesn't want, probably could be really good at sales and marketing, has no interest in it. And so just focuses on, so it's really, it takes a long time to learn those, and this is really basic fundamental economics. Adam Smith talks about this in The Wealth of Nations. Specialization and division of labor. The sooner that you can figure out that's what you need to be doing as a professional within your organization, the faster you can scale it. So for me, it was as soon as I realized, do the stuff that I like and that I'm good at, let other people do the stuff that they like and that they're good at, and find those complementary skill sets. There's no redundancies in the organizations we're running. That's where, honestly, it was just a switch, and everything just started growing from there.
Yeah, I think for me, it's really like I need a buffer in everything that I do. I really only want to communicate with one person. I don't want to communicate with the entire team at the same time. Like for a flip, my best friend and I are flipping partners. She's the project manager. Because if I deal with the contractors, I'll fire everybody every day because I just can't help myself. I think one thing on a wall drives me crazy, and like you won't last 10 seconds in a flip. So when I was doing it on my own, I would be there all the time and always going crazy. And now I create buffers ahead of me so I don't have to freak out because I know my own personality. I'm trying to protect the asset and the job to make sure that it gets done instead of freaking out over nothing all the time.
Smart.
Yeah.
That takes self-awareness.
I think you brought up a great point there, Jonathan, yeah, it's exactly what it is. Self-awareness, right? You've got to know who you are, what you like, what you don't like. And you've got to have and honestly, self-awareness comes from confidence, right? Like admitting your mistakes, admitting you're wrong, admitting you're not that good at something, that comes from confidence. And that same confidence should allow you to, also excel at what you are good at.
Yeah. How did you guys get into the podcast? When did you start it? How did it start? And how's it gone so far? Because obviously it's the biggest investing show in Canada. So I'd love to talk about that as well.
Yeah. So, we
start us off, Dan.
Yeah. So we look like, most people love in our position, love talking about real estate. So, the logical place to go is like doing the interviews and whatever it is. But I look at a show like yours and like, we could never get to the number of reviews or listeners or the quality of guests that you have by doing interviews. I just think like it was a saturated market in the Canadian space, the interview style of real estate. So it's hard for us to get to the level that you're at doing this type of content. And so we took a step back and then also were approached by a network kind of at the same time. And it was like just really serendipitous. They were like, look, like here's the type of show that we do. We think that there's a hole in the real estate space based on what our listeners are saying. We want, and it's basically a two host show. We seldom have guests. Maybe once a month we'll have a guest on. Typically we try and have like guests on that like we would call like maybe an expert witness. So they're an accountant, but it's really like a very educational show. So it's like you're almost listening to a nonfiction book or an audio book, but it's current events throughout the show and basically practical knowledge from 30,000 feet. So from the macro right to buying, managing, operating the asset to refinancing. And so that was absent in the Canadian market. In the US market, it's clear there's a bigger pockets out there as an example. And so not a lot of people are trying to compete with the second biggest show. But the rules are so different. And so a lot of people said, look, you just came in and checked this box. And that allowed us to really grow very quickly. And we've had sustained growth. We've been very, very fortunate in such that like our market has not stopped growing. And the real estate industry has so much to talk about right now. So we've been fortunate that there's no shortage of good content as well.
Yeah. The news makes sure of that.
Yeah.
Yeah, definitely. We definitely got lucky with the time and the place, but we always joke back and forth, the harder we work, the luckier we get. So, full credit to Dan. He was doing a podcast for, I believe, like a year and a half. When we first linked up, I had expressed interest in doing a podcast myself. I love talking to other industry professionals and just learning. And I think, everyone that we had on that old podcast, because I ended up joining Dan and becoming his co-host, everyone that we had was turned into a friend. We've done deals with some of them. Some of them are actually on our team now. And it was awesome. But, we did kind of live in relative obscurity, right? We weren't getting views. We weren't getting much traction. It was a labor of love. But there was a major gap in the market for, under the umbrella of real estate and real estate investing, which includes financing, all the different types of real estate asset classes, construction and supply chain and all that other stuff that fits under that umbrella of real estate. There was nothing there that gave us what we were looking for, almost like a real estate school.
Yeah.
Right. So we just took it upon ourselves to, let's try this different approach. The approach, it's obviously working very well. It's probably triple, if not more, the amount of work than the old podcast was, because we heavily research everything we speak about. Right. We make sure that we're putting out data-driven material that people can rely on us for, whether it's sounding smart with an anecdote at the next cocktail party, or literally learning how to build a portfolio, understanding each aspect of a BRRRR, or what actually goes into project management. We try to talk about the stuff that most people glaze over to a certain extent.
Yeah. I mean, I think people think of real estate investing podcasts as like the niche, but there's all sorts of different things that are under there depending on who the listener is. There's just options. And I think like for podcasts, they change over time. Like you guys said, you had one, you adjust to a different one, and the podcast can change based on the guests, based on the host. So it's interesting to talk to you guys about that process as well. In terms of the markets, have either of you ever invested in the States or strictly in Canada for both of you?
Yeah, so I've invested indirectly, like
strictly
as an LP or through like corps, or like private equity, but I've never been a direct investor in the States. I'm currently exploring with actually one of our listeners who lives on the border. So like there's a lot of border cities obviously in the GTA, and in Canada. So like Windsor, Ontario is right across the river from Detroit. Detroit's actually north of Windsor, which is hilarious. But anyway, I mean, we've been looking at potentially doing some deals in Detroit because he's pushing for an extra property in his portfolio, and he just can't afford another one up here in Canada. And it's like, okay, well, let's go back to the drawing board and start pursuing it. And so I was like, I'll probably come in with you as a partner. So we're kind of right in and this is going to be a huge theme for Canadian real estate investors right now. And I know in the States, like there's a ton of Canadians that live in like Florida, California during the summer, like lots of snowbirds, that are interested in learning more about this. Like it's especially with the boomers making that switch into, and a lot of people like getting fed up with certain, changes in, different countries, different areas. I know you're seeing like huge migrations across the States as well. Everybody's opinions are changing on the way things are being done. So we've attracted definitely an audience who has an interest in Canada and investing in the US. And it's something that we've been asked a number of times to discuss thoroughly. So I was like, I don't want to talk too much about it without experience. So we're literally going down the road right now.
Yeah. Oh, awesome. What about you, Nick?
Yeah, no, I mean, I'll be working with Dan and that listener and future partner among several other people that were in early stages of making the trek south of the border here. Everything I own and everything that I'm involved in owning is in Ontario right now, which is the biggest and the most expensive market in Canada. 1 in 4 Canadians live in the Golden Horseshoe, which is where Dan and I are both coming to you live from. I mean, look, there's a huge willingness on my part to learn. I mean, I started my investing career listening to Bigger Pockets and trying to, taking away the fundamentals that they spoke about, but, not understanding and not having things at our disposal, like a 1031 exchange, for instance, and some of the very interesting mortgage and financial products that the States has to offer. So, I mean, is it, it's not a no, it's just a not yet. And I think, as we see more and more Canadians with a growing interest to look at places again, Florida, North Carolina, Michigan, parts of New York, California, Seattle, they've all come up a number of times. And as we start to realize how small the Canadian market is overall, right? I mean, Canada by population and GDP is smaller than California. There's only so much we can do here, right? There's only about 33 what we would consider semi-major markets. I don't know if a lot of them would be considered major markets if they were cities in the States, but we're going to run out of stuff to do up here sooner or later. So, our sights are definitely set south of the border.
Yeah, that's good. I mean, that also goes to something that we talked about too. I mean, building relationships, and that can obviously be across borders, across countries to understand new markets. I mean, to adapt in new markets, you have to build the connections. Like you said, you're going to build a team in those areas. And that comes from places like Bigger Pockets and your podcast and your listeners, because that's where you figure out you can build all these trust relationships. And I wish everybody would take those opportunities, listen to the podcast, connect with us when they can, and make sure you build that network, because that's what's going to get you to the other areas. You can't just stay in one spot, no matter where you live. your whole investing career. It's just, that's going to get boring anyway. At least it is to me.
Yeah, totally. I mean, I think that's a common thing with a lot of investors, right? I mean, we always preach that when you're starting out, you have to remain laser focused, right? There's the shiny object syndrome that everyone talks about in real estate, self-storage, Airbnbs, medium-term rentals, duplexes, duplex conversions. They're all great, but you're never going to accomplish anything well unless you can remain laser focused. However, if you've got 100 duplexes in the same town or city, you probably have hit that point where you're like, yeah, I can go do something else at this point, whether it's a villa in Costa Rica or a self-storage somewhere in the Midwest. But I think, you have to get to a certain point before you can really spread your wings and kind of, dive into other markets and other asset classes.
Yeah, from both of your point of views, I'll take you first, Dan. What do you think's wrong with the overall real estate investing world? I mean, there's a lot of things going on, and I think everybody in general is interested in investing, whether they say so or not, in real estate. But like the real estate investing world, the people in it are small. What have you guys seen that makes it harder for us to be good investors, or hard for newer investors to know like what's real out there?
Yeah, I think there's a lot of a bit of a guru-ness to it. Like people try and mystify the reality is that like real estate investing and most investing is pretty simple. I think that when people try and complicate it, and like when people are, and I think the biggest way of simplifying things is setting realistic expectations. So, I think a lot of people hear about like people getting rich quick or, making these huge multiples or whatever. But if we were to set a realistic expectation, things become a lot more reasonable. So it's like, okay, what can I actually earn as a investor in anything, a stock investor or a real estate investor or whatever it is. So that would be number one. And I think that the kind of guru-ness does set these huge expectations, extreme multiples, extreme returns, major lifestyle changes or whatever it is. And I think that once so that to me is like a big one. From there, it kind of becomes mystified. It's like, oh, well, these guys are making 15-20% returns per year. They must know something I don't. And it's like, well, maybe that was one deal, or maybe they're lying, or you know what I mean? And so, but there's a secret now behind that thing. And it's like, you need to, now you want to pay or whatever to figure out how to get that or reach that return. And the reality is in a lot of cases that return doesn't exist, or as we're learning now, maybe it was a function of interest rates declining for 20 years and interest rates being net negative for 20 years. And so all of a sudden we're at a point where I think, we're kind of at the swimming naked part, or we're getting to the swimming naked part when the tide goes out and we find out who's swimming naked. And now all of a sudden we're realizing real estate investing is actually pretty simple. Aim for cash flow, right? Don't lose money, right? Don't take unnecessary risks, understand the macro, and stay away from excessive leverage. I think if you do all of those things, real estate can always be a very good, sensible, stable investment. But I think people try and hide a lot of these things by making it sound super scientific or technical because they want you to depend on them. And so I think that's probably the core problem that I would say exists in the real estate space, and probably in most spaces right now. As we're entering the information age, it's like everybody can learn. You can learn everything. You can learn how to be good at pretty much anything by just Googling for a long period of time about it. But people make it like they always dangle this. There's got to be more information out there somewhere. And so, yeah, that to me, I think is a big issue.
Yeah, Nick, before I get to you, I love the term you use, the guru-ness, because we talk about the gurus a lot. And I think with the proliferation of social media and how it's so easy, like you said, to get it out there, like, how do you know that these people really did any of the stuff that they're saying? Or why do you need to 100x everything else you do? That's just probably going to create more risk. It's slow and steady in real estate investing is what gets it done, not fast and loose. Like that just doesn't work. What about you, Nick? What have you seen in terms of like what's wrong with the overall landscape, or what makes it harder for us to be successful?
Yeah, I mean, just to echo Dan's point a bit, I think it's really, a lot of people have been sold on the dream and not the reality, right? And the funny thing is the dream and the reality are so different, but the reality can eventually lead to that dream. You just have to live in that harsh reality for usually a number of years, right? I think, real estate has become synonymous with passive income. It's not true. Real estate investing and flipping and even being a real estate or mortgage professional, loan officer, they've all been heavily romanticized on selling Sunset or selling Beverly Hills or HGTV, which outside of the drama reality stuff, I'm a big fan of some of those shows, and I grew up watching HGTV and I loved it. But it's not reality. So, and I think that can confuse a lot of people. And I think also specifically the last few years, the sentiment towards industry professionals that are making obscene amounts of money, flexing it on Instagram and TikTok and, get into real estate. Here's my Lamborghini kind of thing. And, that doesn't do anyone any favors either, right? I mean, listen, I love cars. I'm a car guy. But if my realtor starts showing up in the Lamborghini, I'm like, what? You're making too much money. Also, maybe they're not making too much money, but maybe they've just over leveraged and bought that car and they don't even believe in the assets that they're selling, right? Like I want my realtor to own several investment properties, not a Lamborghini. I mean, if they can own several investment properties and a Lamborghini as well, that's fantastic. But, I think it's just become too, again, the social media has done amazing things, right? We probably wouldn't be on this podcast if it wasn't for at least some forms of social media. And I can say that if you can seek out the right people on social media, it will 10x your results, because there's an amazing amount of free information out there. But you also have to be more careful than ever. And it's funny, I know this, and I see people that'll go and pay $5,000, $10,000, $25,000 for a real estate course and then not buy a property in 2 years after. So I think, again, people are being sold on the dream and not the reality. If you want to be a real estate investor, figure out how to buy a property as soon as possible, and you will become one very quickly, or you won't, and you'll realize that this isn't for you.
Yeah, I mean, you echoed something that I say all the time, and I don't believe that real estate investing in almost any way is passive. I mean, syndications as an LP is basically the most passive you can get. Anything else that you own yourself is not passive, even in the slightest. Flipping is the least passive thing I've ever done. Landlording is not passive at all. And if you want to have passive income as a landlord, you think that you're paying for the passivity by getting property management, but the property managers still have to check with you on a lot of the major things. So if you're being bothered all the time, that's not passive, so it's like the fallacy that real estate is passive. But like you said, at a certain level, when you've accomplished so much and you have the doors and you own the doors, it can be quasi-passive. But I think when it gets to that point, we all like it so much that we just move up the ranks, like you guys have said earlier. Like you move yourself up to the glass box and have a team that's doing the other stuff. But the real estate itself is never going to be passive. It could burn down, it could blow away, a water leak could happen at any time. And I think that's what people don't understand at all.
Yeah, I mean, from the podcast, it's one of the best things that we've been able to experience. Right, we've got a national audience, so Dan and I love connecting with anybody and everybody that reaches out to us from the podcast. And a lot of them are newbie investors, right? They're trying to figure out how to get their second or third, or they're trying to figure out how to get their first property. And anytime that we hear the word passive, even in that first phone call, that's an immediate, I don't want to say a red flag, because I think it's just they're naive, but, I immediately shut that down and say, the word passive and real estate should not be in the same sentence for probably another 10 years for you, So it's just something that people need to be aware of, because, again, I think that's that dream that's being sold.
Yeah, I see that a lot with the how can I become an investor with no money? That type of like push out there that like, hey, you can become a millionaire from no money. I mean, these things are possible, but that's not ideal. I mean, I don't feel like that's how investing works. If you're investing, you're taking something that you own and putting it in. Sometimes it's time, but that's a very, very like, a small pin to thread through to become a millionaire in a year from having no money. Those things are more Instagram worthy, not necessarily correct. Dan, do you agree with that? Exactly. Have you seen a lot of that, like make money quick in real estate just does not seem to be something that can really happen to me?
Yeah, I mean, I think it's, I don't think there really are any get rich quick schemes per se. I think real estate's very much a get rich slow scheme. And I think, one of the challenges that people just don't really talk about is like, yeah, sure, there are ways to make a lot of money exceptionally quickly. The challenge is that there's a huge risk return trade-off, and the risks are never disclosed. It's like, oh yeah, you can make a lot of money in this way, just give me 20 grand. And it's like, but you don't really realize the person that you're giving this money to, that you have, I mean, even just by giving money to some guru like that, you're taking a, 90% chance that they're just going to disappear with the money. So, I mean, for most, in most cases, the risk return trade-off is really what most people need to think about. And it just doesn't sound sexy or good enough to like, be responsible and save your money and put it into, properly performing assets and,
Yeah.
and slowly accumulate wealth. Like nobody's going to sell a bunch of books or whatever, courses or, or take your money as an LP selling that dream. I think you're kind of getting into this new world of investing now that we're getting into the information age. And I look at like real estate Twitter and stuff like that, where people really are being, are becoming very respectful or grateful to investors who are exceptionally honest, ruthlessly honest, and really tell the truth. But there was really like a whole smoke and mirrors and salesmanship and high pressure in this industry, especially for a long period of time. I'm hoping we're kind of getting to the end of that right now. And I think, the interest rate environment is healing things a little bit, but yeah, I would say totally like there's definitely a lot of that get rich quick stuff it's creating risk for a lot of market participants.
Yeah, I mean, you talked before about the business versus job, and I think that you can see that. I mean, I think if you're running a business, you can't be short term anyway. So you're not thinking get rich quick. You're thinking, how can I build this up? How can I build my brand? How can I build my assets? Versus like, hey, let me just do one wholesale deal and try to make as much money as I can, and then I'm going to become an investor. Can that happen? Yes, but are there so many other risks, like you said? Yes. And all the risks, like Nick said before, too, that you don't know about. And that's why it's so tough to be a brand new real estate investor. There's so much you don't know. I've been doing this for 30 years, and every time I flip a house, something else happens that I've never seen happen before. Every single time, no question about it. It's just the way that it goes. In terms of the books that you guys have read, because we've talked books a little bit, Nick, I know you talked about, of course, Rich Dad, Poor Dad, which is on a lot of our lists, but you also talked about Malcolm Gladwell's books. Are you talking Tipping Point in terms of the 10,000 hours that it takes to become like an expert in a field? And then I'll get to you, Dan.
Yeah, for sure. Look, I Dan's a better guy to ask about this. He's probably much better read than I am. I'm much more of a listener just because I'm always on the move. So I consume a ton of audiobooks and content like that. Obviously it's super cliche to say Rich Dad Poor Dad, so I'm not even going to touch on that. But if you haven't read it, and I'm
gotta do
probably
it,
all your listeners have, yeah, then I've gone back and read it multiple times throughout the last several years, right? Just as a little, I mean, you can read it in 2 days. It's a super easy book to pick up. The Malcolm Gladwell stuff, I mean, I don't love reading about real estate books as much as I do consuming them via other platforms.
Yeah.
Malcolm Gladwell and people that write in that style, I find the sentiment and consumer psychology and human psychology is extremely important as marketing sales guys, as podcast hosts, as someone that is, it's my job to interact and to build trust with people, whether it's through a mortgage, whether it's through them becoming a tenant of mine in a property, whether it's, hopping on this and having this conversation with you. So, I find Malcolm Gladwell stuff fascinating, and yeah, especially the 10,000 hours that really resonated with me when I first read it years ago. And I've really tried to dedicate certain elements that I want to be amazing at, such as this podcast, such as, being a real estate investor. And I've tried to almost like calculate how many more hours I have to go in some of those things. So yeah, that would be it for me.
Dan, what about you? What books have had the greatest impact on you in terms of real estate investing or real estate mindset?
Yeah, it's tough. I mean, I think to me, like when I'm not so much maybe in like mindset and like individual, like, let's say cultivating a good personality or, like self-awareness or being a good person, trying to be of maximum usefulness to others. I would say like most of those things have been from kind of other sources in life. But from a reading perspective, I think things that challenge or introduce like new thought processes or thought like almost leadership in the way that I think about investing in real estate or having a different macro view or whatever it is. So like The Fourth Turning is a book that I talk a lot about, that, you know, gave me a perspective on the social cycles that, so, you know, we talk about political and economic cycles and then social cycles. Ray Dalio's books, I think, Changing World Order is an exceptionally good book. And I've just started Big Debt Crises, but like just really changes the way that I think about money, credit, you know, a lot of those things. I think most of the other stuff, mindset stuff, would really come from like more, I mean, Awareness by Anthony DeMello probably would be like one of my favorite books I've ever read.
One of my favorite books ever.
Yeah, it's an amazing
Same.
book. That one probably solves all of the problems for me, I think, like in that respect. But you know, when I think more about core applicable skills to real estate, it would be like things that really change my macro view and make me think about things that I didn't realize were there before. And it's very similar to like what awareness would do. It's just those are more internal. Those are things that you're seeing inside that weren't there, you didn't realize were there. Same thing, you know, externally.
Yeah, and I think, you know, from both our points of views, for all three of us as podcast hosts, it's what is so good about real estate investing podcasts. You can have all these different guests who come in with a different perspective each week and deliver an episode, or each day, however often you record, and you can get a different view. You don't have to feel like you're, excuse me, stuck in just like one part. Like, you can learn something new. It's why when you look back at, you know, the history of Bigger Pockets, which we've talked about, you know, you can go through there and just look at the topics and say like, hey, today I want to learn about whatever apartment buildings, and just look up the apartment buildings one and listen to one. That's why I think this medium is so interesting, not just for real estate investing, but for, you know, self-awareness, all the things that we talked about. There's a podcast out there for everything that can get somebody to the next level. So before we hop off, for both of you, my last question that I like to ask everyone, if you could give a new real estate investor right now in this current real estate climate, one piece of advice, what would it be? Dan, what about you?
I think the biggest thing is be patient, understand the macro. I mean, I guess it's not one piece of advice, but like, I think probably make educated decisions would be the big one. And so that kind of encompasses everything. And what, you know, if I were to put sub points to that, it would be patient. You don't have to rush. Like, it's not, the market's not binary up or down. There are flat periods in the market. And typically when you're seeing an unwinding of a credit cycle, that's what happens. Be patient and make sure you're looking for the right thing. Make an educated decision. Learn as much as you can so that you can do a good job, because you're going to be, you know, if you're doing it right, you should be holding this asset forever.
Yeah, that's great. I mean, I think so many people, especially investors, new investors, get obsessed with market cycles. I don't even care what the market's doing, because it's just about how I'm going to react to it. I can buy in any market because I can find deals in any market. So it's just about me understanding what the landscape looks like while I'm looking. How about you, Nick? One piece of advice for new or, you know, current real estate investors in this real estate climate?
Yeah, I mean, look, I completely agree with both of your points. They're great. Something for me that I've sought out in every aspect of my life, whether in the corporate world, whether it's starting one of my businesses, and something I did early on in my real estate career, and something I'm still doing, you know, day in and day out, is finding a mentor. I cannot stress how vitally important that is. A mentor will help you get to that first level. They'll help you get to that next level. And you'll always be looking for new mentors, right? That mentor that helped you buy your first duplex isn't going to be the same mentor that helps you buy that first apartment building. So just like Dan said, mentors aren't binary. You don't find one and stick with that person for the rest of your life. I mean, I'm sure you do to, you know, you have a relationship with that person, but, find mentors. So find people that are doing what you want to be doing better than you can do it right now, and make sure that you can add value to that person, because likely they're busy and probably fairly important, and you know, get a lot of requests for help. So if you want to find a mentor, find out how to add value to that person.
Yeah, That's awesome. And it's so important. Like you said, if you're operating and you're always the smartest person in the room, you're never going to learn anything. I mean, that's just
get out of that room.
Yeah. Go find a better room where people know more than you so you can scale up to their level. And then you go up, like you said, to another level. Okay. So tell us a little bit about where they can find the podcast and then where our listeners can connect with you guys so they can follow your show as well and you.
Yeah, for sure. So the show is called the Canadian Real Estate Investor Podcast. Pretty easy to find, very self-descriptive title. And if you just search it, it's on all podcast platforms. My name's Daniel Foch, last name spelled F-O-C-H. So if you guys just Google me, you should be able to find me pretty easily because my last name is kind of an outlier. And usually Google will just give you whatever platform that you're most likely to click on. But I try and be active on everything. I'm on Twitter, I'm on TikTok, I'm on Instagram and YouTube. And I mean, those are kind of the main ones. So you should be able to find me there if you want to send me a message or follow me. Always appreciated.
Yeah, you'll likely find me. If you find Daniel, I won't be too far away. I'm a little less active, but I'm my buddy Nick on most of those platforms. The YouTube channel would be the same, and yeah, the podcast is on all the major stuff. So if you like the podcast, if you want to reach out to us, there's an email in each one of those show notes. And Dan and I do try to get back to anyone and all people that reach out, whether through DMs, because that's how magic can happen.
Yeah. We always say it. I've said it on a lot of podcasts, like DMs work. I mean, there's a lot of bad stuff in the DMs, but like in terms of like the investing world and connecting with people, I feel like it's easier because I don't take phone calls. I get 10,000 texts a day. So DMs is like when I'm in my relaxing time. And then I'm like, oh, look, I mean, especially with podcast booking, like I find a lot of my guests who I kind of know, but I don't know them. And it's easier to just go into a DM and like most of us all just respond. It's nice and easy.
Yeah, love it.
All right. Well, guys, thanks so much. This is the Canadian United States Real Estate Investing Podcast crossover with the co-hosts of the Canadian Real Estate Investor Podcast, Daniel Foch and Nick Hill. Guys, thanks so much for coming on. So excited to meet you guys. And when you come this way, definitely give me a call. We will meet up in the States next time.
Yeah, absolutely.
You got it, man. Thanks so much for having us, Jonathan.
Yeah. All right. This has been episode 35 of Zen and the Art of Real Estate Investing. As you go to follow us, go over, make sure you follow and listen to the Canadian Real Estate Investor Podcast with these guys as well. We'll see you next week.